Okay. Good evening, everyone. I am Varun Aggarwal. I am the founder of Change Engine. I have Mukul Singhal with me, who's the co-founder of Pravega Ventures, which is India's leading early stage fund.
Thank you, Varun.
Uh, Change Engine. Let me first introduce you what is Change Engine. Change Engine is a new organization which I have co-founded, which looks into solving hard problems using an ecosystem of entrepreneurs. We have just launched our flagship program called ACE, Agents of Change Entrepreneurs, where we will work with 6 to 8 entrepreneurs over 6 months' time, taking them from idea, helping them fine-tune their idea to get to a business model, to be able to do a pilot and raise funds. So if you have not applied to ACE, please go to changeengine.in right now, look at some of the more details on the program and apply for it. I've known Mukul for quite a bit of time. Mukul was an advisor to the company which I co-founded, Aspiring Minds, and sold in 2019. So Mukul is a good friend and an advisor. And the good thing about Mukul is he's very analytical. He gives you very sharp feedback based on some framework, not very emotional about it. And whether you like it or not, he'll give you incisive feedback. So I thought it's a good idea to discuss with Mukul about business models and markets and market sizing, where a lot of entrepreneurs make mistakes. From the point of view of the ACE program, we feel that entrepreneurs make mistakes, early mistakes in 3 things. One being the idea itself. Are they solving a problem which really needs to be solved, where there's customer demand? If the idea is good, a lot of them make mistakes on business model or the markets which they choose. And the third is, how do you get escape velocity? Right? How do you really scale? So today, let's talk about Mukul business models, right? And we've been talking to entrepreneurs and want to be entrepreneurs for the last 2-3 weeks. And there are a lot of doubts in their mind around whether they should do a B2C model or a B2B model. Which market should they cater to? Which segment of market they should cater to? And so on. So just to begin with, is there a framework or way to think about business models and evaluating business models? Let's say if I have an idea and then I think of a business model for it, how do I know that this business model is a potentially good business model? A business model where investors like you will be ready to invest money, and finally it will create returns for the entrepreneur and the investors. So any initial thoughts, to think about business models and markets?
Sure. Thank you, Varun, for the kind introduction. Just to put some context and introduction, Pravega is an early stage venture capital fund, and my most of the experience is around investing into technology companies. So whatever we'll be talking here, whatever my experience is, will be a little bit inclined toward technology companies, frameworks, and platforms. May not necessarily cover a lot of offline retail businesses. So something like a retail chain like Chayos or Fab India might be a different framework. My most of the experience is to fund internet businesses, fund software businesses like Make My Trip, Urban Company, Traction database business. So a lot of this frameworks is around technology business. So just a disclaimer on that. Now, coming on the question on how do you evaluate the idea? Is this idea good or bad? Is this business model good or bad? Will you get financing based on this business model? Most of the financing happens on. So I'll start with financing and then we'll come back to business model quickly. But financing happens on 3 things: team, market size, and ability to create a large business, this scale, which is a scale. These are the 3 large parameters, and then everything else is a function of these 3 things. Will happen on these 3 things, isn't it? The team is very qualitative, and we'll talk more about it. But let's come to the second part, which is market size or business model. Scale, we will again, it's a very different concept, and we'll come back to scale. But let's pick the second part, which is the business model, which is a function of market size. And then, can you make money in that business? Maybe the market size is big, but if your ability to make money is not there, then it's may be difficult to get financing or may not be a viable business model.
Is there an example where the market size is big, but the value you are capturing might be low? Some example which might
Yeah, little bit ahead of the curve from this discussion, but think about a UPI. UPI is a big market.
Yeah.
A lot of people are transferring money.
Yeah.
Trillions of dollars getting transferred but nobody is willing to pay on UPI.
Fair enough. So the transaction volume is very, very high.
Transaction volume is very high.
Yeah. So it's a huge market.
Huge market.
But the value you are able to capture for the transfer is very little.
It's practically nothing.
Nothing.
It's a zero.
Right.
So how do you make a business out of it?
Fair enough. That's a good example.
So it's a good big market, but ability to make money is very low. Partly regulatory, partly the way the India is. So that's that example.
Yeah.
Now coming back to the market size in a very very startup thing. Market size is something how much as a whole people are willing to pay for something like this, isn't it? So starting with a very dumb example is like it can be market size of anything like market size of air tickets. How many people are willing to pay? Market size of food, market size of any services. It can be business services, it can be legal services, it can be something like Urban Company is a big brand now, something like beauty services, isn't it? So market size is something at a very, very high level. How much people are willing to pay for that a particular service or for a particular value chain. That's how you define market size. And I think it's a very, in my opinion, it's a fairly different ways to come to market sizes, and it's a very nuanced thought, because a lot of times we do mistake in the sense that India is a big on numbers, isn't it?
Yeah.
We are 1.4 billion people, and very quickly you come back to some conclusion that even if 10% of people buy, then 100 million people, and it's a big number, isn't it? Very quickly we come to those. So in India, many times averages do give misleading numbers, and let's park that aside. But average in case of India can be very, very misleading at times, because
average of what?
Anything. Let's say average income. Our average GDP per capita is $2,000.
Distribution is very skewed.
Top 1% have very large share.
Right.
Bottom 30%
Correct.
doesn't have much share. Then urban-rural divide is very different.
Yeah.
So averages do skew a lot.
Yeah.
Isn't it? In everything. You take it even in food. What a 30 wala chai and what a 5-star chai is like very big income distribution, isn't it? So in India at times averages, but it's a good starting point. You take some averages, you take some bottom-up numbers, and you do some calculation and you get market size of something. So I'll take an example. Let's say take something of market size of legal services in India. How much? What is the lawyers? All the legal services put together, how much, what is that number, how much people pay for that. You take some number of, that's a public data, you take some number of cases, you take some number of lawyers, and you do some ground surveys of around how much a lawyer charge for those surveys, you multiply those numbers, and you get to some market size, isn't it? And that comes out a big number.
Then that's also very skewed, right? Because few lawyers charge even 1 crore for a single hearing.
So here, that is what I call the problem of skew in calculating market size. So when we did that survey a long time back, in legal services that skew is very, very high. So 80-85% of the legal services volume is just charged by very few lawyers. Very few lawyers.
Maybe Supreme Court and High Court representation.
It's something like Mr. Mukul Singhal. Right. Of that caliber.
Yeah.
We call it a celebrity business.
Yeah.
So in celebrity, it's like Mr. Shah Rukh Khan is top of the heap. And while in celebrity business, the waterfall comes down very, very quickly.
In economics, it's called superstars.
So it's a 10th player hardly will make anything.
Yeah. Understood.
It just falls. So you have to be careful with this skew issues in market sizes. Sure. So when we did legal services as a whole, India has a big legal services market, but the addressable market was only 20%.
Of the total market.
So I've introduced a concept called addressable market size.
Yeah.
So you do market size, and then you have to figure out that what you are trying to do, what is the addressable market size in that. And at times that take out a lot of services. Like legal services, it looks very interesting, but pretty much it got eliminated because the SKU is very high.
Sure.
So you try to find out what is the addressable market size. So that's a very, very big fallacy or very big thing which you need to think about it.
Let me pause you here, yeah. So, no, this is very helpful, Mukul, and I was just trying to summarize what you were saying and ask you a few more questions on this. So, you said three things make an investment case: team, market size, and scale, ability to scale, right? And then we went from there on saying that, okay, the market size can be big, but the thing to see is that how much value your product is able to capture in that market really. And is the market also very skewed? So, really, what is your addressable market? Because the market might be large, but because of the skew, you may only be able to get a small part of the market, right? So now just to get an idea, right? And this is a question in a lot of people's mind. By a number, what is a good number for the market size? Is it 100 million? Is it $1 billion? Is it $10 billion? When you think about a business and someone comes to you with a TAM, what TAM will attract you? Or how will you think about it? How should an entrepreneur think about it?
So this question keep coming always,
Yeah.
and everything this question keep coming, and the challenge is it's very difficult to pinpoint a number. But with my experience, what I've seen that it's the multiple of order which matters. So the market size, whatever you come back in on paper, when you do a best case scenario, it has always be billions of dollars.
Yeah.
Otherwise, it doesn't work, because when you target that big market, then you are able to make some small business.
Capture some small pocket
Some small part
of it, right?
If you start with hundreds of $1 million, so is 5 billion big and 10 billion big? I think both are big enough.
Yeah.
You will
So it's an order thing. The order should be in
thing.
billions.
Order should be in billions. It may be possible that one business is slightly smaller and one business is slightly bigger. It doesn't matter. Both will create value.
Yeah.
But if it is too small, then nothing will happen. So the
That's
order
a
of
thresholding.
so it's thresholding.
Yeah.
Its order of magnitude has to be large.
Right.
Then it's 100 or 200 is equally small.
Yeah.
And 5 and 10 are equally big.
Yeah. So if some of you are thinking of a business model in where you have calculated the TAM to be 500 million, it's not a good market size.
It's not a good market size.
Right? So it should be at least over $1 billion.
Having said that, I want to bring another concept
Yeah.
here, which we call it concept of adoption. And in my experience of the last 10 years, most of the time it has positively surprised than negatively surprised. And a very good example is a company like Flipkart, which all of us looked at 12 years back. And what a simple market size exercise we did is that we took all the publishers, number of people who are buying books, studying books, and that market pretty much came $100 million.
Yeah.
Isn't it? And that's a small market.
That's a very small market.
But Flipkart proved that it's not a small market, and the reason for that is that many times is the latent demand which is not known in the market.
Sure.
So the fact that the availability of a product became easy, it was available at the point of a click, and it was coming to your home.
Yeah.
That just expanded a very big market.
Sure. No, and I think that's a very important point, right? Because latent demand is something we talk about at ACE because we focus on the job tech sector, right? So when we are talking about creating jobs, one of the things is that can you capture latent demand, right? So probably a product which did not exist before, so there's no way to probably know its demand today. But if there's a latent demand for it, which is big enough, then probably you can make a big business, right? And some of these latent demands, as you were saying, you were giving in the Flipkart example, is a function of new technology being available, right? So that was not possible before.
Right. Largely, latent demand I have seen is rides on the technology.
Right? So even if you look at Uber or Ola,
it's a latent
right?
demand.
Because earlier, because of GPS, you can now order a taxi wherever you are. You couldn't do it before. So it's a latent demand. We didn't know.
Yeah.
So that's a very good point. And for people who are interested in the job tech area, one thing which we are interested in is being able to identify latent demand, which could be substantially large, like it happened in Flipkart's case, and be able to build businesses around that, right? And that is almost, from an economic standpoint, a free lunch. It can have some cannibalization, but it could be a free lunch creating a lot of number of new jobs. So, Mukul, we have talked about a little bit of frameworks and you've given some examples, but let's now turn it around and I'll give you an example of a business, right? And let's try to deconstruct what you said with that example, right? And I'm not saying this is a good example or bad example, right?
Yeah.
So when we were talking to some students recently at IIT Delhi, they talked about wanting to build a pet care business, right? So business for people who have pets, and they were talking about mainly two services. One, they said that we would connect them to vets on phone. So it was kind of a subscription they can take, and anytime there's a problem, they can talk to a vet on the phone, right? And the second thing they wanted to add to that was pet walking. So all these pets need walking, so they wanted to do a pet walking kind of service with it, right? And then they had some more ideas to put in. But let's say if this is the business someone is thinking about, where it's a consumer business, it's a subscription business around pets and care of pets, and let's say these two services. How will you evaluate this idea? And both from the market size point of view, scalability point of view, business model point of view.
Sure. So we'll start with an easy way and try to introduce more and more variables, because every business evaluation is fairly complex.
Yeah.
So in this, first, my very initial reaction would be how many people will own a pet, and I think that's a little bit easier problem to solve, because it's very largely probably linked to the income levels. I would think so. Unless you can afford a pet, you can buy it, and happy to hear contra views on that. But that should be an easier problem, that if these many people have the income ability, then will they acquire a pet or not? That's one part. Second, the pet services and the pet walker. So pet walker is a very localized problem. It's a kind of a marketplace thing, hyper-local kind of thing, and typically, assuming if the pet is owned by a fairly high income group, if it is not, then that's a different point altogether. But if it is high income group, localization, busy city life, those kind of elements lend very beautifully to technology platforms, because it's a matchmaking problem. It's a local search problem. It's like a job, gig job problem, isn't it? So those problems beautifully lend itself to technology platforms. The challenge which it starts happening is the disintermediation issues. Isn't it?
Can you explain? Our audience will not know what disintermediation means.
So in marketplaces, a very big issue across marketplaces, which you figure out there is a degree of disintermediation, which means that you have connected a buyer to a supplier. So in this case, the pet owner gets connected to a pet walker, and platform is saying, I will take a monthly cut every month. But because now the pet walker will start becoming familiar with the pet owner, they make a cut that why do you need a platform?
So they remove the platform.
You remove the platform, you come to me, I'll pay you this much, and there's an understanding between this, isn't it? So every marketplace has some level of disintermediation. We can't make it zero, and it doesn't make sense to make it zero.
Is this an India problem? Global problem?
It's a global problem.
It's a global problem.
The only thing is that level of disintermediation and the economics supporting that disintermediation.
Sure.
Those are the things which you need to take care. And then there are few level of disintermediation. I'll give you a few examples. So take a Ola example. Ola example, the level of disintermediation is low because both supply and demand are always moving in time and in location. So isn't it? You are always on the move. At times you need a car in your house, at times in your office.
So you cannot.
At times, so you can't have
one person latch to one person.
You can't
say because you every time need a different driver will come to you, a different car will come to you. So that will reduce.
On time axis you are changing yourself, and location axis also you are changing yourself.
So what you're saying is there can be certain marketplaces which by design, the way they are built, will have lower disintermediation.
Very tough to disintermediate. The places which are
repetitive services,
in this case there will be some level of disintermediation because house is constant.
House
is sitting there. You have to go to one place daily at the same time. Isn't it? It's a beautiful case of disintermediation. Only thing which can help in this dog walker case. So think about it: Airbnb versus normal hotel. Isn't it? So if the dog walker If the dog walker is changing every time, then disintermediation will not happen.
Sure.
If you are saying that you hire a dog walker for per month basis, then disintermediation will be very quick.
Yeah.
So in some of these jobs, gig workers especially, if you tokenize the gig, the level of disintermediation
make it
will
small.
Make it small. Having said that, tokenization is also a difficult problem to do. So easiest is that you supply a dog walker for a monthly basis, but that will be most disintermediate. So there are pros and cons. Every business model you need to figure out that where it fits well.
Sure.
But you need to be aware about disintermediation, and definitely if you're going for fundraise, that question will come.
Got it.
Some level of disintermediation will happen for sure.
Sure.
How much and what unit economics, that will answer it.
Sure. And one quickly, just the conversation we were having before we started, you were talking about someone doing a school chain and the child getting hurt. Do you think that there's a risk, the pet getting hurt with the walker? Do you think that would be a big risk or a small risk?
So that risk is there, and that risk has happened globally with all the big gig marketplaces.
Yeah.
So Ola or Uber driver misbehaved the passenger, isn't it? Platforms do get negative publicity, or other way around, like Swiggy or Zomato, the buyer misbehaved with the courier guy, delivery boy. All that comes as a platform, you need to be prepared for those things, legally and operationally both.
Got it. A one-on-one question, right, on this. Like, so this individual said to us that he will do both vet pet connection, the doctor pet connection, and he will do this pet walking. When we talk about a lot of entrepreneurs, they would put 2, 3, 4 things in their subscription package, right? And they would think giving more is a good idea. It helps them build a bigger business. It also, the thing is, when I sometimes ask them that how are you better than competition, they say, oh, they only give this, but we give this. Is this a good idea or a bad idea?
Has to happen on a case-by-case basis. Most of the times, marketplaces, in the start, that may be a bad idea. The reason for it that marketplaces are built on liquidity. So you need more walkers and more demand, more supply, more demand, more supply.
Yeah.
And that's why your marketplace become more
Market
effects start coming in. So if you start focusing a lot on different kind of TG, your initial journey becomes difficult. So either it feeds itself in a very beautiful way.
There's also some synergy between the two.
But if it is not, then you better not do it to start with, and later on evaluate if it makes sense or not.
Right. So mostly you are saying, though it's case-to-case basis, mostly begin with one thing and do it very, very well, right? And then maybe add more things kind of later. If there's some natural synergy where growth in one thing, it moves like a vicious.
Good example, all these Zomato, Swiggy, isn't it? They've tried a lot, but still they are best known for the delivery. Isn't it?
Yeah.
They have tried a lot of things, but it's a challenging part.
And definitely, Mukul, I think most cases, that being a value proposition over competition, that you are doing 2 things versus 1 isn't the right value proposition.
Because the consumer is not coming to you for 2 things. Consumer will come here, can you give me the dog walker in the cheapest price, in the quickest manner, in the most reliable manner?
Sure.
Isn't it?
Yeah.
So if that your competitor is giving dog walker effectively, and if you are doing 2 things non-effectively, then consumer will definitely go there.
Okay. So that's helpful. There's a lot of questions about B2C versus B2B businesses, right? When you have an idea, there's some ideas which are tenable to both, kind of thing. High level question that what is the big difference between building B2C, B2B businesses and when one is choosing models? And at the same time, now audience can start putting questions on the chat, because we start opening up after this question. So please put your questions on chat regarding anything we have spoken or any other questions you have on ideas or business models and so on. And Mukul, just a few, I know it's a very complicated topic, taking 5,000 feet view may not be easy, but 101, B2C versus B2B.
So very high level learnings for me in B2C, B2B has been in that while in B2C, you can start with few discounts, few losses, and eventually consumer becomes sticky. There is some brand promise and there is some brand stickiness. In B2B, it's very, very difficult to create brand stickiness.
I see.
In B2B, the other side is also a business. And for him, the economics make sense a lot. because he is in turn selling it to something else and then making money on top of it.
Got it.
So B2B businesses, the buyer do shift
More easily.
They don't, and they are less fragmented. Consumers are 100 million consumers.
Exactly.
But businesses are always lesser. And more bigger businesses you cater to, easier it would be for them to shift. There are no network effects there. So in B2B businesses, I think people should try to build them in a positive unit economics as much as possible.
Yeah. What would you say as pros and cons of B2C, just in comparison? So B2C, you will say that probably stickiness is higher.
But then you have to spend a lot more money.
So it's very capital intensive.
Little bit of capital intensive in the sense you have to spend marketing dollars. It's a fragmented market, so you have to reach out to 100 consumers, 1,000 consumers.
Yeah.
While in B2B, you can take five businesses and you are in business.
Yeah.
Isn't it?
Yeah. So you're saying that because it's very fragmented, your wallet share per customer is probably lower.
Probably it takes more money to bootstrap.
And grow. Whereas B2B businesses, it would be easier to start, but you need to see that you have stickiness in the business and you're not losing clients. And maybe that also means that in particular services or products, it might become a more winner-takes-all kind of.
B2C becomes winner-take-all. B2B tend to fragment quickly and more.
Okay, I see. Okay, let's pause there and take a few questions and then we'll continue the discussion. So
there is one question. I believe.
You want to speak out the question?
There is Abhishek who is asking, how do you evaluate an idea which is detecting cancer in their early stage with the help of AI and in which there are many health regulations?
Okay. So it's a deep tech idea, Mukul, and for everyone's benefit, the question is that the idea this guy is thinking about is using AI to detect cancer at its early stages, right? So probably, as we all know, a lot of people, have fertility because cancer was detected much later in its life cycle. So he's asking how, again, we know we cannot dissect this idea in the amount of time we have, but high level, if he's thinking about an idea to use AI for early detection of cancer, how do you think about that, evaluate that idea? And he's also making a point that it's a regulated space, right?
Yeah, so some of these ideas, I think, are one step before the monetization, and you start asking those revenue-related questions. Yeah. These ideas are more about technology efficacy, that how much you can do in healthcare. Even the 90% reliability is no reliability.
Yeah.
A drug can't get launched if it is 90% reliable, isn't it? So the efficacy of technologies is a very big thing. You need to prove that the technology is right, reliable and predictable. And second, then because it's regulated, then the regulatory umbrella has to. So regulation will define the way you build the business model. For example, if it is non-regulated, if you don't want to go through the rigor of regulated, somebody like this can only support a doctor in doing something. It can't give an end judgment.
Right.
So let's say it's like it's an aid. So let's say a lot of this X-ray scan businesses, you use AI to figure out this X-ray, if it is 50% here and there, then the doctor takes a manual look still.
Yeah.
Because finally the doctor has to give a sign off on that conclusion. But if you go through the regulatory thing, then you can become a end result itself.
And what you were saying earlier, how much value in the market you are capturing. If you are not the end result, probably you will capture less value in the market. Whereas if you are end result, you probably capture more.
You can't do a one paint all, and especially in healthcare sector.
Yeah.
Because in healthcare, if you are able to save manual labor, manual time, then you are able to save a lot of dollars.
I see.
And then your speed to market becomes also important. So those things can help it.
Yeah. But from a TAM point of view, of course, if you are getting to the end result, your addressable market will increase because the value you are able to capture is more.
Intuitively, yes. Having said that, it will take more dollars.
It will take more dollars to get there.
Because it's regulated.
Makes sense. No, so that's a good perspective, Mukul. And I'll just add to it that deep tech works a little differently, as you were saying, right? First, it is just establishing the technology and its efficacy.
Product gestation time is long.
Product gestation time is very long, and for those who don't know, if you look at the Silicon Valley and I have seen companies in US and Canada, startups, which will be building products for 3 to 5 years.
Yeah.
Right, and it's a different ecosystem from what we have here in India, where people like Mukul will on first day ask you, what is the TAM? When can you prove the TAM?
It's a different ecosystem.
Right. So deep tech is still up and coming. I and Nishtha wrote a book on it 2-3 years back called Futurepreneurs. So we'd love to send you a copy. The person who asked this question, and there's a particular case study in that on a company called Niramai, which is using AI for breast
Niramai is
cancer.
a good example. So something like this will follow the same trajectory of
Correct. So Niramai will talk about all these regulatory issues. What Mukul was talking about, whether it's the end result or is an aid to the doctor and so on. So please, refer to this book, Futurepreneurs, which we'll be happy to send you a copy with, and look at the case study of a company called Niramai, which is founded by, very, very interesting women of it. Yeah, so I'll add some more to this, Mukul. Of course, aspiring minds use a lot of AI in building a lot of tools, right? And first, another example from the book is a company called Cropin. Right, which was doing similar things, right? Where they were able to predict the yield of a farm and even the size of the farm using satellite data and using AI on top of it for lenders, making lenders more efficient who are giving money to it. But look, when you're talking about AI and all these models being online, basically a lot of entrepreneurship is about finding the use case and being able to reliably use AI to solve that use case, right? So good businesses are formed when you bring the theory of product management and AI together, right? AI is a tool.
You have to use AI to solve some problem.
Some problem, right? And how are you constructing it into a product which will solve a problem well is where entrepreneurship happens. Just for reference, there's another term which you can look up on the internet. It's called recombinant innovation. Right? So recombinant innovation basically means that there are all these things which we already know and exist as technologies, but bringing it together, right, builds a product which is differentiated. And in fact, iPhone is considered an example of that, right? Because it brought in voice, voice recognition, which was already there, GPS, which was already there, and touch screens as a technology already there, right? And touch screen, by the way, 2 touch screens was recently patented in a university before that, a few years back, right? So it's a great example of using new upcoming technology, which might get open source, but building it for specific use cases. Right, and again, I mean, a great example now is ChatGPT versus Google, right? The same technology was available to both of them, but some ChatGPT has some solution which Google doesn't have today. So just going on, Shalinder, do you have more questions?
There's one more business idea.
Yeah.
Saying about a fit wallet where an individual will be able to access a fitness center using his finger scan and be able to pay for that particular day instead of being a member of that fitness center. It's like a fit wallet.
So it's a fit wallet, and they would be, he can go to any fitness center using it and pay per day.
So, very difficult to evaluate case by case businesses. But something like this, you need to do it holistically in the sense the gym owner, whoever the gym is, how he manages capacity utilization. Because capacity utilization is a function of incident-based users, monthly users, yearly users. If everybody starts giving incident-based pricing or attendance, then there can be higher dropout. So it's a function of all this. So so again coming back to something like, let's say Airbnb, something start lending house for one night. Does it make sense? So you start asking those questions.
Yeah.
It can make sense. It may not make sense.
Sure.
Depending on the economics of the gym.
Sure. So framework-wise, this is a little more complex because we are saying that there's existing infrastructure which we are trying to use in a different way.
So what this particular idea is doing, it's an interesting concept to do it for a minute, is that it's tokenizing a particular product. The product is gym membership.
Yeah.
So historically, the gym membership, the way we know, is a monthly or a half yearly or yearly product.
Yeah.
you can use technology to make a hourly or a daily product.
Correct.
And that's how the technology is used globally.
Sure.
Historically, you hire a cab for a whole day, but Ola made or Uber made it for a trip.
And technology can help you see inventory happening and book
so
cut
technology can help you a lot, and that's the goal of technology. In the sense, we call it sachetization in Indian concept.
Yeah.
Like Hindustan Lever make a sachet of shampoo.
Yeah.
You are putting sachet of these products, and technology helps a lot. Something like this is very relevant for Indian market where average selling prices are low, and hence the product TAM suddenly increases when you decrease the price.
Sure.
But for everything, you need to evaluate the back-end infrastructure economics.
Yeah.
Does it support that kind of tokenization or not? If it supports, then it can be interesting and powerful, especially for Indian context.
I think another question here would be, relating to what we were saying before, that how many people will need access to fitness centers at different places at different periods of time? Probably only ones who travel a lot, right? Otherwise, most of the times they are anyway at the same place. So your probably TAM will decrease to only people who are traveling around the country or around the world. So that might be a big problem because a minute set of people.
So WeWork is a good example, isn't it? WeWork bought the commercial office space product, which is a yearly lease product, to a monthly or even an hourly. You can have bought a daily desk.
Yeah.
So WeWork is a good example for something like that. But the base infra makes sense or not, that is a case by case basis.
Sure. Okay. That's a good way to think about it.
There is one more question on cloud kitchen. So, in the current scenario, will opening cloud kitchen be a good idea? Where we can partner with different small and medium restaurants to scale there.
Okay. Look, so guys, we are not going to be able to evaluate very particular ideas, but what we can do is that give you some frameworks, and if it's and maybe fit it in a framework and how one would think about this business. Does it fall in one of the archetypes and so on? So let's spend a minute on Cloud Kitchen. Do you have more questions, Shalendra? Okay, so then I'll ask you a couple of more questions. So the question is that, and Cloud Kitchen have become very popular, right? So you might be ordering from, thinking that you're ordering from different brands which might be coming from the same kitchen, in Daryaganj somewhere, which has no outward brand but only a digital brand per se. And I think the person is asking that if you were thinking about opening Cloud Kitchen, is there a good business idea or not?
See, the way we are seeing cloud kitchens is the basic idea is around, look, you don't need to spend a bomb to hire a restaurant now because anyways everything is selling on Swiggy and Zomato. So you take a location which is a little bit not premium location. Yeah. And that's why it's called cloud kitchen.
Yeah.
And then you deliver demand from there. So again, it's a question of economics and business model. Obviously, there is an offline component attached to it. There is a real estate element still. So scalability becomes a question mark. So you need to think about a scale, but you have to evaluate the business economics.
Yeah. And would you call this a technology business?
It may not be a technology.
It may not be a technology.
It's something like sharing of real estate business. Yeah. Okay, I got some big warehouse in a back-end space and giving that cloud kitchen to McDonald's, Domino's, Punjabi, something to all together.
So intuitively, it may not become as large as a technology business could typically become. It would be operationally intensive, more traditional.
You have to think through it. Will it become? There will be more questions on the scalability than there will be.
But it would be a good cash generating business.
It can be a good cash generating business if the business economics is making sense.
Yeah. So Mukul, one thing I wanted to ask you is that, see, we are in the space of job tech, right? And we are talking about creating jobs, improving jobs, and matching jobs, right? And one example which everyone here knows about is Urban Company, right? And it's definitely, in my mind, improving jobs because the same person is able to make more money now than he or she was before, is one hypothesis. And maybe where there's latent, if they've been able to capture latent demand, like now they offer massage at home, right? Which is a service which didn't exist. So probably there's also job creation going on there. But that is, Urban Company is one journey which has happened in the job tech space. So if we talk about other archetypes, a very old one is Naukri. Then we talk about Uber, which is probably latent demand and creating new jobs and so on. We also talk about Infosys, right? Saying that that's captured demand in the West and being able to create jobs here in India. But any more journey you can talk about in job tech or similar to Urban Company or different, which we have seen, and from a business model point of view, right? Because Urban Company follows one kind of a business model, which is totally B2C marketplace kind of a business model.
See, I'm just thinking a lot why I did Urban Company 7-8 years back is the first era of technology and jobs happened in the form of Naukri was simple matchmaking of white collar jobs, isn't it? We saw Naukri, we saw Monster, we saw a bunch of those businesses fighting for that classified
listing business.
Classified listing business, and it made sense 20 years back, and Naukri became big. We also saw businesses like Just Dial, where consumers are asking for business services. It's just a yellow pages business. It's a yellow pages listing business. Just Dial was that you're looking for a logistic person, you don't have the number because it's a fragmented business. So it's a yellow pages business. Then we noticed two segments happening 10 years back. One happening because the technology was becoming big, technology was becoming well penetrated. People were asking verticalization that look, I am not for few things I don't want this classified, you give me the service. So Ola, Uber happened that you give me the cab, you own the experience.
So what you're saying in classifieds, there's still a lot of friction.
Classified just a matchmaking. आपको नंबर चाहिए, मैंने नंबर दे दिया.
पर मैचमेकिंग फाइनली हुई कि नहीं हुई ये भी आपको नहीं पता, राइट?
वो नहीं पता, वो classified business है. Nothing wrong, nothing right about it. It's a good business. But that's the classified business.
It is just, it's in the value chain of matching, it's picked up one thing, which is listing and doing that.
They are doing that. So real estate, we've got 99 acres of businesses. But then people have started also asking that, look, I don't want this matchmaking, you give me the service. So Ola, Uber is got that example. We did Urban Company at that time. A lot of other businesses also got funded. So Urban Company made their name in the beauty businesses. And one reason was that, and second thing which I realized in Urban Company did unlock latent demand in the sense that initially there was a pain to go to a salon. It was an issue. If somebody is coming at your home, then probably you can be more impulsive and you can call it at the leisure of the home. There were a lot of questions around intermediation and all of those, but that didn't happen
at the scale. The leakage was under control.
Leakage and economics was hand in hand. And it did provide, knowingly, unknowingly, a lot of democratization of jobs in that thing. So historically, अगर आपको saloon खोलना है, then real estate will become an entry barrier. So you will work with some saloon guy and he will pay you 10,000, 15,000 rupees. But if you're on an Urban Company kind of platform, then these individuals, what they lack marketing skills, marketing skills, isn't it? And the tech platforms provided that marketing skills, that trust which is needed.
So it's also an example of mass entrepreneurship, right?
Because it's an example of mass entrepreneurship. The person can be on the platform, and if you want to work hard, you want to work 20 hours, then you make more money. If you want to work 5 hours, you make less money. It's a simple thing. When you're employed in a saloon, that flexibility was not there, and you definitely can't open your own saloon because real estate costs were prohibitive. It's like Amazon sellers. Amazon sellers democratized the marketplace thing. Anybody can become a seller today.
Otherwise, you would have to go and negotiate with a chain to put your product, get the space on the shelf.
That was one trend we recognized, and we did a bunch of those investments. And the second thing, which what you told about Infosys, we think that there was an export of services happening there in a gig fashion. So Upwork happened in that era. That can you hire a developer or a designer in that sense.
And there's some tokenization.
Having said that, not much success has happened in export of services. We have not seen a lot of democratization of jobs for multiple reasons in that, and that is still continue to remain an open area.
So that's a good probably gap area.
I think so. It's a gap area. If you remember, E-Lens happened 20 years back. That didn't go anywhere for various reasons. But that still can be a gap area. Few products like Fever has happened globally. So businesses have been built. It's just that we have not built for out of India. But
even if I look at, I use Upwork myself, and Indians listed on Upwork would be a minority. There are a lot of people from Bangladesh and other countries and so on. But I would not say that India is definitely not the top. On that, maybe not even the top 3 or top 5, right? Which is also interesting that why a lot of people have not been able to latch on, and there could be friction on the reasons,
could be some other reasons
for doing that. So you think that there is some gap area in exports of services. I think what we are saying is that we are still seeing the tip of the iceberg, right? The potential is much higher.
It's putting it very simple, it's more of we have a large English-speaking population which is skilled.
Yeah.
There's a large market TAM outside.
Right.
There are some regulatory challenges there, but that's a different point altogether. But if people can figure out good entry points, then there may be some.
So, what do you think about not putting it another way, but export of people, right? So a lot of people from India go to the Middle East in the hospitality for 3 to 5 years. I hear there's a lot of unmet demand in, let's say, truck drivers in Canada, in Australia, in Europe, and so on. And a lot of this demand can be met from India, and even providing much better salaries to these guys. Do you think that's an area?
So, see, we have looked at that area but didn't go much deep, and the reason for that is, this is happening for last 30 years. As this is not happening, this is happening.
Sure.
Now, the challenge with export of people comes that by design, the regulation comes in picture because you are exporting people beyond nation boundaries. And when that happens, then it tends to fragment.
Yeah.
So I don't know what value a technology or a platform will bring on table. You need to define that.
Yeah.
Otherwise, you will become you will become a large offline vendor of exporting people, which there are already in India.
A lot of them. But
them.
if there's some value through technology which can be created, which gives scale, which these guys have not been able to do, then
so that is the question mark.
That's the story.
That's the story. And in this business, you have to be careful because regulation do come into
regulation, and even getting visas, getting
and a lot of most of the times you have to do workarounds, which as a platform you may not be able to do a workaround.
Right, and that might become a problem if you're scaling up. Right, that is a hack.
That's the hack,
which won't be scaled. Sure. Let me ask you one more question, and then if there's another question, we'll take that, and then we'll probably come to the conclusion. So, see, when you're talking about freelancing or catering to Western demand, which is big. One is B2B demand, but there could also be B2C demand in the West, which we can cater from here. One example could be like yoga instructors. Right, so if you go in the US, you want to do yoga and every other person is doing yoga, and if you go to a yoga studio, you probably get charged $50 to $100 for an hour. And what do you think of meeting such demands using a technology platform where there are trained people here who is serving B2C demand? Like there have been also businesses which were built in the tutoring kind of area and so on. I don't know what happened. Did any of them scale and so on?
So, B2C obviously is interesting. There are a lot of dollars in there, big market. In COVID times, a lot of efforts also been done, a lot of companies popped up. In B2C, I think two things people have to be careful about. One thing is that in B2C, there are few services where there is a strong touch point with the consumer, strong interface, so something like a one-on-one yoga instructor. And then do you have the required supply of English speaking yoga who can talk the same language? So teaching maths and teaching yoga is a different thing. So Indians are known for maths. Teaching maths is also much more objective, and teaching yoga is also a little bit a personality and subjectivity.
More soft skill oriented.
More soft skill. So do you have we saw businesses like gym instructor. And there, the conclusion from the founder only came that you need a more white speaking, white skinned. So not instructors who are based in US.
We can solve that using AI maybe now. Make the person white skinned on the fly.
So that's a good point now, which is my second challenge. That puts you in a regulatory gray zone.
Sure.
So
I agree.
If you impersonate something else and don't tell it to consumer. Then it's a regulatory gray zone, and a lot of startups got closed because of that in India. Because in US, so you keep getting in these newspapers, call center fraud happens. Let's say you sold some service, collected money from the consumer, and if consumer complained, for some reason, he got dissatisfied with something and he complained. Then the US regulatory angle.
And it's very strong, so it can be a death knell for the company. Right? It's not like India that there was some paperwork which you replied to. Right? So you have to make sure.
So that's the issue.
Okay, good.
So there's one more question. How can one enter a market where competitor is generating 100 million in revenue, but there is still room to grow?
So one, if
Let me repeat the question. I don't know if they're able to hear him or not. So they're saying that how do you build a business in a market where a competitor is already generating $100 million, but the person thinks that there's still room to grow in that market.
So one question is one thing is like you need to figure out a degree of fragmentation of that market. If that market is $100 million competitor is owning 40-50% market share, then it's a very, very difficult thing to do because he's pretty much the leader by far.
Yeah.
But if he's making $100 million with 1-2% market share, then that's a very different sweet spot.
So what percentage of TAM does he actually
what
have?
Percentage of TAM, what leadership is position he has in the market, isn't it? That you need to define. Second question is, even if it is in your favor, then you can't enter with a head-on product offering. You need to think through a good entry point, which is a fairly differentiated or a different TG. So, for example, there may be a real estate broker selling a 100 crore flat, and there may be a real estate broker selling a 1 crore flat. Fundamentally different experience, different thing. So you need to think all those things before doing that.
No, and Mukul, I think two thoughts on that, right? One related to what you were saying, right? And I am finding this when I'm talking to young entrepreneurs a lot, that they come up with an incrementally better idea, right? Like everyone today, I talk to half the people want to build an e-commerce business, right? And they say, oh, we will, let's say use VR to show the product on the person, right? So we find a lot of incrementally better ideas, which I don't think can disrupt leaders in the market. So the differentiation needs to be very wide. The offering has to be very, very different. These small differentiations will not work. And I think the other thing which was coming to my mind is that to also see what kind of market product it is, right? Some are winner takes all market. So you might anyway be screwed, right? Like if you talk about Naukri and job boards, if you see across the world, it is a winner takes all market, right? So that is another thing too.
No fundamental disruption has happened in the jobs classified business, isn't it?
Yeah.
Whoever was there 10 years back is still there.
Is still there. So no, thanks Mukul. This was very, very useful. Thanks for talking to us today, and I think this will help you guys a little bit to think more about your businesses. 1 hour of this discussion will not go all the way, but I'm hoping that it will, give you some ideas, some frameworks, and at least generate enough curiosity in you to go and study more around this. And we also talked about the job tech area, which ACE is particularly interested in. So, if you guys have an idea in the job tech area, we will definitely be interested in talking to you. And as Mukul said, he's an early stage, he runs an early stage fund, one of the most successful ones in India, which has taken bets, which have really worked. So we also look forward to Mukul helping us fund some of the companies that goes through this platform. And, one reason to, listen to Mukul is of course because he's smart and he has experience, but we have to listen to him because, he's controlling the funds, right? So we have to listen to these guys. It's good to listen to these guys, whether they're right or wrong, because they define who's getting money right now in the market. Right, on that lighter note, thanks again, Mukul. Thanks for doing this. And we put this session on YouTube, for future references, and we'll send all of you guys a mail so that you can refer to the session in the future as well. And please send any further questions to Team ACE, and we'll be happy to respond to you. Thank you. Thanks everyone for joining. Thank you. Go ahead. This is the last one. And others can feel free to drop out because we would like to keep this on time. So anyone who wants to drop out, feel free to drop out, but we'll take this one last question.
So, there are so many businesses which, are copying of, for example, we have Ola, which was copy of Uber's response rate. Let's say Flipkart, copy of Amazon. There are so many, right? So do you think if something is existing in Western country or US, it's not existing in India, it is good idea to copy the business model in something like this, which is really successful there. That's like some company got thousands of rupees per day, and it's successful there, but not available in India now.
So is it a good idea to transfer a so-called successful idea from the Western markets to an Indian market? And the examples he's giving is Uber, Ola, and so on.
So this is a good debate. See, but this is like a 15-year-old opportunity, and it's pretty much opportunity past done. I think Flipkart, you can still do Flipkart and Amazon comparison, that Flipkart started in 2008-9 and Amazon started in 90s, but Ola and Uber pretty much start in a very, very near time frame. So that and exporting Western models to India happened in 2006, 7, 8, 9, and whatever needs to be exported got exported or imported, isn't it? Now there are fundamentally I hardly think there are opportunities which are there in West and yet not copied in India if they are worth copying. And the way the India and China has shaped up the digital economy is very, very different from the way it has shaped up in the West. So I'll give you a few examples. West is still a very strong desktop market. India is, like, if you see the Flipkart or Amazon, today 80-90% is mobile revenue. It's a very fundamental different markets. West is still a big desktop market. Payments, West PayPal makes 4% on a payment business. India, you don't make any money on a payment business, isn't it? India is all Android, West is all iPhone. Very, very different economies. So the way the India is shaped up and shaping up, and it's also true for China in many cases, it's very different from West. So to blindly copy from West in today's is not advisable. It happened 15 years back, and जिसको बड़ा बनना था वो बन गया, जो नहीं बना. But it's pretty much a 10-year-old opportunity.
One point of difference and one comment was that, so I agree, you're saying that a lot of that opportunity is already taken, right? But another hat which I wear is to look at research and technology disruption, right? So one hypothesis I have is that again technology disruption will happen. Again, West will be first comer in building some of these new companies based on the technology disruption which happens in India is generally 5 years to 10 years behind. So there could be new models which come up in the West which might then get copied in India.
So business models will not get copied. See, with the technology, the thing is the technology application in India will be very, very different.
Very different.
Because the unit economics value chain is very different. In the West, you can pick a $2,000 robot or a $10,000 robot and put it into a warehouse.
Yeah.
But in India,
the economics
doesn't work to do that capex.
So you cannot blindly copy.
You can't blindly put it.
Yeah.
Obviously, some of the technology disruption is still happening on the West, but how you apply it in India
will be different.
Is very, very different and very use case driven. Business models, I really don't think they just go hand in hand. So, give you an example. Urban company kind of business failed in West.
In the West.
It didn't work out. Sure. Because supply of
I agree. Totally agree. You can't just retrofit. You
just can't retrofit.
And just one comment for this gentleman, and then we close this session, that this is a very successful company. It's raised $100 million. I don't think the benchmark of success is the amount of money which you raise, right? And in the last 2 years, a lot of companies raised a lot of money which had not even got a product market fit.
Yeah.
So I just caution you that when you think of success, don't make it as a function of the money it has raised. It's the success is really finally what value it's created for the shareholder.
Well, think about it, read the business model, but that's not the only parameter. It may be a 20% parameter, but that's
correct.
it.
Yes, exactly. I think that's the right way to put it. Okay, guys, thank you. Thanks again, and thanks for the very interesting questions. And good evening to all of you, and we'll end it here.
Thank you.
Thank you, guys. Thank you.